I know it's a hot take. Nobody likes the Fed, but they may have got it right. And here's a big sign. China, the second largest economy in the world, waited until we cut. Then they made the biggest massive injection of stimulus since 2015.
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Newport Beach. I want to get a video out after the PCE report on Friday, and just got tied up with 4 flag football games, and then we had 4 soccer games yesterday. My little son here, and Serafina, she actually had to miss her game. Little Fifi do. Man, busy day, busy week, tons of news. Off to a baseball game here in a second. Go ahead, monkeys, get out. You can get it. All right, so the Fed was right. They were right on transitory inflation. Depends on your timeline. They're late to start the cuts. They got it right with the 50 basis point cut early, although they should have cut probably in July or earlier. But they got probably 2 more cuts later this year, and all the rules are being broken. The SOM rule, the half point of unemployment rate going up. I'll get it, baby. Go ahead and go outside. Get ready. Get your baseball uniform on, buddy. The game's in 22 minutes. Arrival. The Fed has broken a lot of other rules. The disinverted curve, remember the yield curve, the 10-year and 2-year Treasury, supposed to be in a recession now. We may be in a recession currently. Remember, GDP is usually the big factor there, and jobs breaking, but jobs haven't broke in, and we'll find out this week with Jobs Week. Oh, it's right here, baby. Okay, go ahead, big girl. All right, so I know it's a hot take. Nobody likes the Fed, but they may have got it right. And here's a big sign. China, the second largest economy in the world, waited until we cut. Then they made the biggest massive injection of stimulus since 2015. They cut their interest rate. They made it easier for down payments on houses, which most people get their net worth in China from homes. And that real estate market has been cratering and taking outright deflation on home price appreciation. We don't have that problem here. We have high inflation. Still, it's sticky, even in the core PCE, which excludes food and energy, which nobody does. But I think if you count food and energy, we're at 2.2%. We're under on headline PCE. Now, the core PCE went up from 2.6 to 2.7. That was because a year ago, the number that got replaced was very low. And even though we came in at like 0.2 or whatever it is, like, I don't know the decimal place, we went up from 2.6 to 2.7 on core. The street thought we'd go to 2.8%. Now, I am not a financial advisor. I am not responsible for your losses, only your profits. But tomorrow's the last day of September, the last day of the quarter, and a lot of money managers like to window dress. So you've seen this run up in stocks in the last week or two. A lot of money managers are trying to dress up the accounts. So when you get those quarterly statements that we put through for all of our borrowers, to have assets, they got to make it look better. I would not be surprised starting Monday, even starting a little bit tomorrow, but starting Monday and in October, if we see the stock market sell off. In an election year, the win rate for the stock market is only 38%. It's a very rough month. September is usually not a great month, but we bucked the trend in September in the stock market. You had stimulus from the Fed. You've got low unemployment, low inflation, all these things. Now, GDP read came out. It was 3% for Q2. That's the final number. Now, that's quite a bit up from Q1 that was 1.4%. Now, anything under 2% GDP is considered contractionary. And so you might get what's called recession talk again. Remember, it used to be if you had under 2% GDP 2 quarters in a row, you were in a recession. Now this conference board has to look back a year later and say, oh, we were in a recession. So the early numbers are 1.7 to 1.9% for this quarter, Q3, that is ending tomorrow. And if we have another quarter in Q4 under 2%, jobs continue to soften, which it is jobs week. We will have a big jobs report on Friday, JOLTS report, job opening labor turnover, ADP report. All the reports come out this week. By the way, I live in the flight path of John Wayne, so you're about to see the most annoying thing. I'm sure you can hear this plane rumbling overhead. Every plane that takes off, typically when the wind is blowing in from the ocean, goes over my house. So there you go. There it is. Just saw it go by. Anyway, Baltic ship, the Baltic Dry Index, which is it's like 50,000 ships like cruising around the world all at once. Rates have gone up a little bit. Copper, Dr. Copper, remember that? A barometer of the economy. Copper's been going up. That's usually a barometer that the economy is growing. And so, is it growing enough to be over 2%, right? Maybe you kind of bouncing up and down. We're up one quarter, down one quarter. By the way, that 3% GDP read in Q2 was mostly because of inventories being built up. So will buyers come in and buy those goods, buy those, all the supply that's being built up for housing goods and durable goods? We'll watch those reports as they come out. Next week, CPI, Consumer Price Index, and PPI come out, so we'll get some more inflation reads. But we're really looking at labor, so this week is really, really big. If you get a couple soft jobs reports in a row here and people looking under the hood, it might be an excuse for the market to sell off, take some profit early in Q4. And it's not abnormal to have like a 5% sell-off in the stock market. Even at 10%, is a normal, digestion of profits as the market thinks about what's happening around the world. Israel striking in the heart of Beirut in Lebanon to kill the leader of Hezbollah, that is a big deal. I don't think it's a big deal because Lebanon shoots rockets, by the hundreds, right, at Israel. So I'm trying to get all that crap to stop. Geopolitical risk is always there. Here goes another plane to disrupt my video. That's how it goes. So, we're watching the economy, watching jobs this week. That's the big week. I fly to Dallas tomorrow afternoon. I'll be there for the Housing Wire IMB, Independent Mortgage Banker Summit. Got a good group of speakers out there. I'll be speaking right before lunch with Candace McNutt and also Laura Brandeo. Of course, the whole Housing Wire crew will be there. Sarah Wheeler, everybody else. I'm letting my hair grow out. I may wear some glasses and do my best Logan Motoshami impersonation. Love his charts, love his data. Kind of a nerd too, and just have a different filter on my end, being one of the owners of an IMB. So lots to talk about this week. I'll probably do a video Tuesday and then maybe another one on Friday. Okay, so the China stimulus is big because they're a huge commodities player in the world. It's another reason probably why copper's starting to run up a little bit. They're a big buyer of it. So if there's more stimulus, you'll see that. You'll see some business flow over into one of the largest economies in the world, Japan, which I believe is fourth behind India. So you'll see a big trickle-down effect of all that stimulus in China. Maybe some inflation will run up in some of those other nations or maybe some of the other smaller Asian Pacific Rim nations. So we'll see how all that goes. Lots to watch, lots to talk about. Rates, what are they doing? They're kind of touching on that high end of the range they've been in. The 10-year Treasury obviously is the barometer, hanging around 375, 380. Can it get to 390? That's the next level of resistance. I think it depends on jobs, and we'll see how all that goes. In our state, Gavin Newsom, the governor, signed a law that affects realtors. So now not only do all realtors have to negotiate their buy-side agreement, in the state of California starting January 1st, those buy-side agreements are only good for 3 months. So that's a law now here. So, buyers, the nanny state is out to protect you. So, just another more regulation from one of the most unfriendly business states in the entire nation. So not only do you have to renegotiate your commission, you can only make your commission in 3 months, or else you got to reset and renegotiate again. I've heard that sellers are still paying buy-side commissions, so there hasn't been too much of a drop-off out there. So lots going on in the world right now. It's huge, the way we all work together. The Fed is right. They're winning. Prove me wrong. Love to see in the comments below. That 50 basis point was big. PCE going up to 2.7 on core PCE will probably make that next cut the first week in November by the Fed, literally right after the election is officially over, and barring any recounts and lawsuits and drama and dangling chads, for those who remember all that from the George W. Bush era, which, by the way, the George W. Bush Presidential Library is where the Housing Wire IMB Summit is at. But we'll see. The Fed's likely to go only 25 basis points and then another 25 or 50 on that last meeting of the year in December. Really depends on the jobs report. Remember, the last dot plot, they said they're only going to do 100 basis points of cuts this year. So we'll see. That's only 25 and 25 left. So November's looking like 25. But here's the thing. When inflation comes down, which the headline number is at 2.2%, if the Fed funds rate is here and inflation's here and lowering, the Fed funds rate is still restrictive. So this rate needs to catch up to inflation. That gap in the middle is where the strength of the Fed funds rate is restricting our economy, which we know it's been restricting, especially if the GDP early reads are looking like under 2%. So hopefully we can digest all that. You hung with me here. Off to baseball. Got my video out. Have a fantastic end of the quarter. Let's close those deals, especially those purchases, and let's rock and roll in Q4. Get ready for Halloween. Cheers. Hey, it's KP coming to you live from Dallas, Texas. We're at the famous Javier's. They got a cigar room over there. Javier's, let's go. Hey, we're in Texas. We got cowboy hats and boots. Ice, who owns Encompass, which is our company's LOS, had a dinner. They hosted. And I am in town for the Housing Wire IMB Summit, the Independent Mortgage Bankers Summit, which is a great show. Like the first run show and really well done. Housing Wire had it at the George W. Bush Presidential Library, which is on SMU campus. For my dad got his master's in electrical engineering. The Texas Instruments paid for it. Anyway, my sister lives very close here. I grew up here. The liquor stores that were owned by Vietnamese people that used to sell to us when we were 15 is right around the corner. It's amazing. Thank you. Happy New Year. Chúc mừng năm mới. So what's going on in the world today? Well, World War III almost started today. Maybe it started. 180 missiles were lobbed from Iran into Israel. And dockworkers went on strike. The job openings report was like there's like a little more openings, but a little less quitting. So kind of mixed news there. It's still jobs week. It's a lot going on. The Fed has spoken since yesterday. You hear a lot of Fed speakers to speak. And, but we have some more data. ADP payroll report, jobs report this week. It's a really big week. It's like a huge jobs week. The dockworker strike is important because all the ports on the East Coast and the Gulf Coast, there's no one offloading ships, although they made an exception for any military ships or any, I think cruise ships, oil ships, excuse me. So there still is some commerce happening. Almost got run over by Cardigan. It's a valet guy, so we saw me. But wasn't a Ferrari like in Nashville, for those that remember that video. Walk and talk is dangerous to send. Anyway, the IMB Summit's been great. A lot of great content, a lot of great speakers. It's been pretty awesome, to be honest. I'm glad I came to Dallas, my hometown. Gonna hopefully see my sister and mother and my sister's two kids, my niece and nephew, tomorrow, which will be great. Okay, so the stock market sold off a little bit. I am not a financial advisor. I am not responsible for your losses, only your profits. I will just tell you that with uncertainty in the world, remember, for years I've been talking about uncertainty versus certainty, and I haven't really said it much lately. But there's a lot of uncertainty rearing its ugly head. And so even in a bull market, even in a great stock market, this is Chelsea Corner, which is where some people went to, and we're staying at the Highland, and we're having fun here. When there's uncertainty in the world, and there's an election coming up, there's always an October surprise. Is the Fed going to go 25? Are they going to go 50 at the next cut? Is there going to be World War III? Are the Houthi rebels going to keep killing commerce? And Ukraine is still at war with Russia. even in a bear market when things are going great, there's still trepidation. You know, you don't want to get overexcited in the markets. You don't want to feel too good. Like, you know, I don't share a lot about PRMG on here, but I'll just say, like, we had a great lock month last month. There was only 20 funding days in September versus 22 in August. And we had more locks outright, not just per day, but like more locks outright. For us, a little over $1 billion in locks versus like 970 in the month before. We funded a little over 800 million across our career channels. It's great for our little privately owned, you know, company with, you know, our awesome family environment. You know, we're not trying to be number one and pump our chest out in front of the world. You know, like, you know, we're not a servicer. You know, we just serve our people and our communities and our families. But things are good. But when things are good, you know, what's lurking around the corner? What's going to take it down? When's it going to get bad? That's how the markets always feel. So, especially when there's uncertainty and there's turbulence right in our face. So I'll just say that, you know, there's a lot of news that's coming out this week that can give us angst and make us feel a certain way. Like, for example, inflation. You know, people say, well, inflation is going up. Inflation's not at 2%. Yeah, but everything other than housing is pretty low. You know, it's under 2%. Most of the inflation data points in the core PCE are under 2%. So we're there. That's why we started cutting. That's why the Fed started cutting. I will say this again. You can't just say inflation, because the big part of inflation is housing. And I will tell you right now, like, I've been taught, like, my entire life since I studied European history in 8th grade, I have felt that America will be like Europe at some point, and there will be no middle class, and there are the haves and the have-nots. And being a have means owning a home. So all of us out there, realtors, originators, leaders of those companies, we need to push people into getting a house, because that is how you build wealth. And if you can't build wealth and own a home, at some point, it's out of reach. And, you know, the builders are not building. They're not building enough supply. I'm not saying it's happening right now. Rates coming down makes things more affordable. But a storm like Helene, holy shit, 120 people have passed away. Like, you know, I did a podcast on Friday saying how people don't take it seriously. The storm surge and being on the coast, and it's a killer. Like, God, my heart just aches. Like, seeing these pictures, these towns, these people are wiped out. You know, and that not only obviously is a loss of life and communities that you all build together in our business, but now insurance is going to go up for everybody and make it just a little bit more unaffordable. So let's take advantage of lowering rates. This could be our last good chance as a society. You know, I don't know. I'm not, right? I like to try and, like, take bets in the future, but it's getting really hard to own a home. So with rates coming down, let's help as many people as we can. Again, like, our hearts go out to everyone in Israel and all the states that were in the path of Helene. You know, I lived in Fort Lauderdale for 13 years before I moved to California. I literally took a direct hit from Katrina. And no one talks about when Katrina hit Fort Lauderdale. It was a category 1 or 2. It was pretty devastating. The eye of the storm literally went over my townhome. Like, I felt it was really weird. It was like the perfect, gorgeous, amazing day for like a few minutes, and then the eye passed, and then all the wind was going that way, and then it started going the other way. It took down my palm trees. But obviously it hit New Orleans and took out the levees, and we had a lot of loss of life. My dad's younger sister, Aunt Frances, lived there, and she had to move to Arkansas. Had a Zoom call with my Sicilian family today. We talked to Aunt Frances, who was directly impacted by Katrina. So, you know, I've been in direct impact from Wilma. I've seen a bunch of storms. You know, it's tough. Like, it's, you know, but that's life. Life's tough. You got to be tough. Tough times make tough people. And it's a tough time right now. But rates are coming down, and that's a tailwind. Don't let it make you soft. Keep getting purchase business. Keep going after non-QM business. Keep looking for business that will help build communities, and it could be a future refinance. Have a wonderful day. I'm super proud of you know, all the people who came out for this IMB summit. We have our leadership conference for PMG's retail channel next week at Huntington Beach, Saya Hotel, Monday, Tuesday, Wednesday. I'll get a video out later this week after the jobs report. Have a wonderful week. Safe travels. Cheers. Hey, it's KP coming to you live from Newport Beach. Jobs week is over. My thoughts on the Fed being kind of right on the soft landing. We'll talk about that. Here's my crappy Sanford and Son yard. Still have a lot of work to do. And this, by the way, if you've never heard of the marine layer for Newport Beach, this is the edge of it. It's actually kind of interesting. I thought I'd show you this. So there's a battle all day. Look at the clouds here. So you can see the edge of the clouds. See it's coming in? See those clouds moving over there? So we're on the edge here. You know, sometimes the sun will burn it off and the clouds go back towards the water over there. Now they're moving back in, which means it's going to be a little chilly here on my walk and talk. I'll make my way down to the back bay. But it is a nice little cool little layer. It makes the summers kind of mild and the winters not so cold. Kind of brackets the temperature here. Okay, so jobs week's over, and we're going to talk about the biggest Amazon facility ever built. And we're going to talk about Tesla and their big announcement next week for robo-taxis, the cyber taxi. And what does that have to do with jobs? Well, you know, productivity is a big deal, and AI is going to create tons of productivity. By the way, shout out to my boy Alec Hansen. Okay, Alec Hansen, the chief marketing officer of Loan Depot, my neighbor. Dude goes all out for Halloween. That's his front yard. Fog machine, laser lights. They walk around these giant costumes. You see this spider? You see this freaking spider in his yard? Like, I mean, it's crazy. He's a stud. He's awesome, man. Okay, so the jobs report was a little hotter today, the Bureau of Labor Statistics. You know, we had the unemployment rate go down to 4.1%. That's the second month in a row where we went from 4.3, which was technically 4.25, to 4.22 to now 4.1% unemployment rate. The last time in each, I mean, the dot-com crash, the global financial crisis, I mean, all these different, you know, oil crises, you know, past has been prologue that labor unemployment has topped out when there's been 2 months in a row of the unemployment rate going down. And so we just had that happen. Now, we've also had a lot of things get blown out that haven't caused a recession, like an uninverted yield curve. And so far, the SOM rule with that unemployment rate going up half a point in a short period of time. So we're going to watch all these rules and see if this Fed stimulus, you know, doesn't bring inflation back. It'll be interesting that we'll be talking about that. Wage inflation grew today on the jobs report for the 16th straight month. Okay, remember we were talking about the wage price spiral that was a part of inflation, that was something the Fed was fearful of back during COVID. Is it coming back? So I would say that the meeting in November is not going to be a 50 basis point cut at this point. There's not enough labor weakening or economic weakening. That doesn't mean that there aren't pieces in there that are soft. For example, people are quitting jobs at the lowest rate since 2015. That's because they're not confident that they're going to go out and find another job. Yes, leisure and hospitality was a big component of today's jobs report. But, you know, are you quitting, you know, a corporate white collar job that we saw some strength in the ADP payroll report, or even the jobs report today, to go work in leisure and hospitality? Not necessarily. There's government, there's healthcare and education, all pretty much government-sponsored parts of our economy. Manufacturing is down again on the jobs report today. So little mixed news in there, you know, this week. The job openings report went up to 8 million on the job openings on the JOLTS report. And then on the weekly jobless claims, you know, the continuing claims, people staying, you know, out looking for jobs, is elevated yet again at 1.8 million, even though the number of new claims this week was not terribly high. So it's a little mixed bag, and you know, our economy just keeps plugging along. And is this what a soft landing looks like? You know, I again, this is why we look at all the data. But remember, the Fed said on their dot plot at their last meeting, they're doing 100 basis points of cuts this year. That means, as of right now, 25 and 25. What's happening is inflation is coming down and wages are going up if you are employed. And that's, you know, that means that the Fed funds rate being as high as it is restrictive. So think about that. Every time inflation comes down and the Fed funds rate doesn't also come down with it,
that means there's more restriction that the Fed funds rate is hammering on society. And so, it's only been 50 basis points of cuts. We haven't seen immediately lower credit cards, lower student loans and car loans take an effect on our economy. So we still have elevated rates. So again, it takes time to work through the system. And I guess this is what a soft landing looks like for now. Okay, so the strike ended. It lasted a couple days. Technically, the longshoreman strike did not end. Remember, that had the potential to be $1 billion a day in damage or more, or up to $5 billion worth of economic damage. And it was interesting. The two sticky points for the labor union working, the ILA working on behalf of the workers, the dock workers, is they wanted a 72% pay increase. They got 77%. They got 62%. Terms to be settled between now and January. So it's not done. They just averted disaster for now, like everything kicking can down the road post-election. So whoever gets elected, it'll be their problem to clean up, I'm sure, or get involved in. But the other big sticking point of the strike was the longshoremen's, the International Longshoremen Alliance, or whatever it's called, ILA. They wanted a guarantee forever until the end of time that there would be no automation at the ports, thus potentially automating, longshoremen and foremen out of their jobs. So am I supposed to throw my phone away and go back to no air conditioning and black and white TV? I mean, look at this gorgeous house right here on the end of the back bay. Are they supposed to use picks and shovels and mud? So the big sticking point, I think, between now and January, when they finally negotiate that deal, is, are they going to allow for port automation? And they absolutely should. We need it. It's society. That's how it goes. So that'll be interesting to see how that develops. Speaking of automation, in the Inland Empire, where Corona is, like Riverside County, Amazon has a facility that is totally automated. It's got 2,000 workers, and it has the capacity of 50 million items a day get moved around logistically. They're currently up to using 30 million pieces of whatever the hell we're all buying on Amazon a day now. And so automation's coming. You think it's not coming? It's coming. Look at my Tesla. We talk about all the time. You got the full self-driving. Okay, there'll be a robo-taxi, cyber-taxi update next week from Tesla. And it's basically going to say, all right, well, here it is. Here's the cyber-taxi. You can now plug into the system with full self-driving. We'll see what that announcement says. They were a little short on their deliveries this week, and so the stock got hit. I am not a financial advisor. I'm not responsible for your losses, only your profits. But they've recovered a little bit today, because now we're heading into the next piece of the news cycle, which is them talking about robotaxi next week, and then they have their earnings at the end of the month. Q3 earnings season is kicking off in earnest, typically when the financial centers talk. So Bank of America, Goldman Sachs, Morgan Stanley, Citibank, all of them will start to talk, Ally Bank, about where they think the economy's going. They have a lot of insights on people's cash flow, what their bank accounts look like, credit cards, student loan debt, personal loans, home loans. I mean, it's very important, excuse me, especially with the Fed cutting interest rates, which could potentially take away their ability to make income. Although they've been reserving for losses, credit card debt, defaults, all that kind of stuff, people's low savings, blah, 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 all that stuff we talk about all the time. When we hear banks and what they say, it's very impactful. So earnings season is going to, help, drop, kick, and drive our stocks, as my boy Louis Navalier would say. It's every stock for himself. There's still some uncertainty in the world. God knows what the hell's going to happen. I don't think Israel has responded yet to Iran. Oil prices are kind of creeping up, but they're not like super crazy yet. And you just never know what the hell's going to go on in this world. So, you got Ukraine war, you got freaking all kinds of shit going on all the time. So anyway, we have our leadership conference, PRMG's retail leadership conference next week. So Monday, Tuesday, Wednesday, I will be at our retail channel leadership conference at the Paseo Hotel on the beach, overlooking sunset. Should be good. My boys Zactus will be there. They're a sponsor. Looking forward to seeing them at the NBA annual as well. And gosh, it's fall. Seasons have changed. So the winds of change are sweeping through everything. Don't worry if rates went up. They did not go over a 4 handle on 10-year Treasury today. I don't know, are we going to see higher rates from here? I think we might be bracketed under 4 on a 10-year. Be a nice time to clear out the pipeline. I'm sure there'll be a reason coming up in the next 30, 60 days for rates to come down. Maybe it's the Fed rate cut. Maybe it's the presidential election. Who knows? But bottom line is it's fall. Seasons have changed. It's getting a little chilly. Trying to get cold here at this marine layer. Have a wonderful October weekend. Pray for me. I've got all 4 kids. Wife is on a mommy wine trip. 4 flag football games tonight, 4 soccer games tomorrow, and a birthday party. Daisy's on Sunday, another soccer game, another baseball game, flag football practice. Let's go.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.